Here we are in the QBO gym, and this is the place where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it easier for you, we break it down into 4 different sections. So if you are a bookkeeper and you are looking to work on your bookkeeping skills, this is the place for you. And if you'd like to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. Let's go ahead and get started with today's exercise, which is being pulled from our June Year 1 Strength Training section, where we really focus on perpetual inventory. At the top here is an animated video to give you a little summary of what's going on in Craig's world this month. He is our fictitious business owner. Further down is an interactive pre-assessment quiz that relates to the video up above. Below that are all of the exercises in this section. And at the bottom here is an optional area where after you have gone through all of these exercises and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's dive into today's exercise where we're going to be working on recording different transactions, specifically paying bills and making a deposit. Go ahead and click on that link to have the exercise pulled up for you. I have it over here on the right side of my screen, so let's read through the scenario. The last 2 things Craig has for you to do this month are paying bills, one for Mahoney Mugs for his inventory and one for his MasterCard, and a deposit. That deposit was his tax refund check from the IRS. When he went to the bank, most went into his business account, but he kept some of the cash as a treat for himself. You will need to be in the same session of the sample company that you did all the previous exercises in this section. If you have not completed those yet, go ahead and click on the link on the top right corner of your screen. That'll take you to the first exercise. Complete that one and all the ones after that until you get back to this one. They all build on each other, so it's really important you start with that first one. I have the sample company pulled up here on the left side of my screen. This is the last page that I left off of from the previous exercise. So let's go ahead and get started with the exercise. Start with the money that came in, namely Craig's tax refund check. It's important to note that income taxes are paid by Craig, not Craig's business. So the refund is Craig's, not his business. For this reason, he should have deposited the money into his personal account and then transferred any money he wanted to contribute to the business. Since that's not what he did, though, we need to record it the way it actually happened in real life. So to do that bank deposit, we're going to click on the plus new button and then select bank deposit. So at the top here on the left-hand corner is the plus new button. Click on that. And then in the other column, go ahead and select bank deposit. We want to confirm that the checking account is selected in the account section. So it is for me right here. Just make sure that this says checking. The date is going to default to today's date. Of course, in a real life scenario, you want to make sure that this date matches the date of the deposit itself. So let's scroll down on this bank deposit transaction here to the add funds to this deposit section. On that first line in the received from field, we're going to type IRS and then click the plus add new IRS. So click into that field right there, type IRS. Since it is not currently a vendor or customer here, we need to add it. So go ahead and click on that plus add new. And we're going to go ahead and click on save. That is on the bottom right corner. We don't need to fill out any other information for this. Now, it's important to note that the personal money that Craig deposited into his bank account, his business account, is considered an owner's contribution, which is a type of equity account. Because there is no such account in this sample company, we have chosen to save some time and just use the retained earnings account, which is also an equity account. In a real life scenario, though, you would want to take the time to create the correct account for reporting purposes. So we're going to use another equity account for the purposes of this exercise, but in a real life scenario with your clients, you definitely want to create this equity account, this owner's contribution, which just says that he has put his own personal money into the business. So on this same line, we are going to, in the account field, select retained earnings. So click into that down or click that down arrow. You can scroll until you find equity accounts, which I believe are towards the bottom here. Yep, they're almost exactly to the bottom here. Here is that retained earnings. Alternatively, you could have typed in the name in the account field. In the description field, let's type owner's tax refund check, just so we know what it's for. So click into that description field and go ahead and type that. Owner's tax refund check. In the payment method field, we want to select check since that's how it was received. Click that down arrow, select check. And then in the amount field, we want to type $2,780. It was $2,780 that he got back from the IRS. If there was a check number that we had, we would go ahead and put that in the reference number field. We don't have it for this exercise, so we're leaving that field blank. All right, so let's record that he had taken some of the money. On the second line in the receive from field, we're going to type Craig and then click on plus add new Craig. So go ahead and click on that into that box. Go ahead and type Craig's name. Click plus add new Craig. We don't need to fill out any other information here, so just go ahead and click on the green save button. Note that by using this line rather than the cashback goes to field right here, you can specify that it went to Craig. So on the second line in the account field, we're going to once again select retained earnings. Go ahead and click into that box. I'm going to once again go ahead and I'm going to type this time to find it. Once you do, go ahead and click on it. In the description field, we're going to type cash out to owner. So click into that description field, go ahead and type cash out to owner. In the payment method field, we want to select cash. So click on that down arrow, select cash. And then in the amount field, we want to type negative 300. Now, this last negative line records the fact that part of the value of the check didn't stay in Craig's bank account, resulting in a total deposit that is smaller than the check value. So click into that amount field, type negative 300. If you hit the tab key over, you will see that QBO makes that calculation automatically for you. Everything looks good, so now we can just click on the green Save and Close button, click that down arrow, select Save and Close. And now that bank deposit for his IRS check has been recorded. Now, Craig sees in his online portal that the current balance on the MasterCard is $214.97. He tells you that he has paid the full balance, even though you haven't gotten a statement yet to reconcile. So here's how you would do it. Paying down a credit card is a simple matter of transferring money from one account to another. However, QBO provides a pay down credit card tool that can be utilized instead. In this exercise, you will use that tool. In a real life scenario, though, using a transfer transaction will accomplish the exact same thing. So we are going to record that he has made the payment. And just so you know, this is not that he is making the payment right now. This is just recording that he has made the payment, however it is, whether he went into the credit card account or he sent something, whatever it is, however it is that he paid it. This is now, we're recording that payment. So we're going to click the plus new button and then select pay down credit card. Plus new button on the top left corner, click on that. And then in the other column is this pay down credit card. Here is also that transfer transaction that we were just talking about, but we're going to use this pay down credit card transaction for this exercise. So go ahead and click on that. In the first one, which credit card did you pay? It's going to be MasterCard. So click into that down arrow, go ahead and select MasterCard. In the how much did you pay field, we want to type $214.97. So click into that, type $214.97. We're going to leave the date of payment date as is. It defaults to today. Of course, you would want to make sure that this matches the date of the actual payment. And then in the what did you use to make this payment field, we want to select checking. So click that down arrow and then select checking. And this is all good to go. We can go ahead and click on the Save and Close button on the bottom right corner. And that payment has been successfully recorded. Now, Craig used an ACH payment from his checking account to pay Mahoney for the inventory he purchased earlier this month. So this is how it would be recorded. We want to click on the plus new button and then select Pay Bills. So the plus new button on the top left corner, once again, click on that. And then under Vendors, you want to select Pay Bills. In the payment account field, we want to select checking. So click that down arrow, go ahead and select checking. In this payment date field, we're going to again leave it as is. It's defaulting to today, but you would want it to match the date of this bill actually being paid. In the starting check number field, we want to delete the number, and that's because Craig paid via ACH, so there's no check number that's associated with this payment. So go ahead and delete that 72 so it is out of there. We want to click on the check box next to the bill from Mahoney Mugs, which is at the bottom here. You can click on that checkbox so that it's showing that this is the payment that was made. And you'll note that as soon as you clicked on that checkbox, that QBO automatically filled in this payment field to match the open balance. That is the full amount that is entered for the payment. So if you're not paying this in full, you would want to change the number here to reflect the actual amount that is being paid. So this is good to go. We have this all finished. So all we need to do is click the down arrow and then go ahead and save and close. And now that bill has been marked as paid, and that is it. That is how you would pay bills and you would make deposits. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We move on to the cardio section where we really focus on periodic inventory with our next exercise where we practice importing products and services. And I will see you in the next video.